Good evening, everyone. Hope you're doing all right. We switched it to evenings now because what we'll do a video in the morning about technicals, and the evening is going to be like a wrap up. So this is a wrap up from Friday, basically. So the big picture is that we're risk on, but the herd have also gone long. So that's a little bit of a worry. Ideally, we want them to short. And if we're going to be, bullish indices, we want them to be bearish. However, they did kind of buy the dip a little bit, and so that's a little bit of a concern. The VIX is quite low, to be honest with you, and we're below the yearly pivot. CAD's the strongest, yen is the weakest, so CAD yen would be a good long, Aussie yen would be a good long, but we want to obviously be very careful still, because we're not out of the woods. We've got lots of geopolitical issues, and we've got that Fed QT as well, and yeah, so this is all zeroed because basically the retail guys, well, we've reset the spreadsheet and they haven't moved yet. So once they've moved, then we'll see this shift in, and then we can prey on them, basically, which is how all the banks do. They'll have a visibility of what the small fry are doing, and this gives us that visibility. So yeah, note what the bubbles and what's buy and sell, and there's pound being a sell, for example. Kiwi, gold, Swiss, dollar is in the middle, 50-50, and currency strength meter, CAD's the strongest on the small time frames as we closed Friday, and on the month and the weekly was strong as well, and that would agree with the CAD bubble location. So that's kind of funny, the coincidence or not. Well, not really, because the retail guys are going to get punished, and so they're so a counter trend, they're going to hold on, even though technicals indicating buy and the sentiment saying buy, but they're going to hold on and they're going to incur losses, and so that's how it works. So kind of sucks to be short when you can see on the monthly, weekly, even on the daily as well. CAD's the second strongest on the daily, so they're going to get a bit screwed, I think. So they closed out the week as the strongest. And here we are looking at the FXCM client sentiment, and you can see greens are buy and reds are sell. So Euro USD is teetering on and off. It's basically at the at the threshold of being buy or sell, and the indices are green, but we want them to be more green ideally. And there's the Euro yen, and you'd see how strong that's been, and that's because of that. So US oils are buy and gold's a sell. And there's the S&P sentiment. So they went long here, so we did fall, but we're not close to crossing at all. We've got quite a bit of leeway before they cross, so that's going to take time. It's probably going to be London tomorrow, maybe even New York. What we want them to do is short it against this line, this 21 moving average, and once they short it, then it's going to be a buy. So it has to fall in order to convince them that it's going to continue to fall, and then they'll be stuck. So we don't want them to be buying the dips. So they bought the dip here, and down we came to punish them, because that's how, just that sentiment for you. So I think maybe a break of this technical line, 1, 2, 3, 4 respects. We know that the retail guys look at hourly charts, because that's like the normal time frame to be looking at. So maybe a break of this would convince them that we are going to fall, and then they'll short it, and then we'll be buy the dip opportunity. So we really want them to short it, so we're actually as a high level buy, but we're a high level sell, as you can see by the red. So we're not out of the woods yet, so be careful with the S&P. And gold's became a sell here because they went long. See the SSI line crossed the moving average, and we deviated across time, and so it became a stronger sell as they went long. And so it came down, and this happens time and time again on every single instrument. And so yeah, we can't do a hexagon what if scenario because this is sideways. So here on the S&P we can see that the lines are going to possibly converge. Nothing's really happening on gold. It's sideways, right? So I think this is a bit of a concern as well, because you see how this yield curve is flattening at the long dated. You know how you kind of want it to be going like this, like in a sense, but this is like teetering off and plateauing. So this is a bit of a worry, and there's no inversion, but they're close to inverting. This pumped a lot on Friday, so this is a bit of a worry, and that would coincide with this. So I think maybe we will fall, but that would be right because they're long. Right, they try to buy this dip, so they have to get punished. So I think maybe we'll have like a bit of a bearish scenario, and hopefully they don't buy the dip. Really, really hope they don't, because then it's going to skew things again. So this could be like a risk-off scenario brewing potentially. And this is where we were pretty much on the Russia-Ukraine crisis top, when everything was going pretty crazy. The 30-year spiked almost to this degree. So maybe be a bit careful, I think, over Asia. London, we could be a bit bumpy as well. And hopefully they don't try and buy the dip. If they do, then it's going to be pretty horrendous. So stop loss cluster update in this indicators courtesy of fxssi.com. There's the link, so just click the link and you get a huge savings. So by using this link, you can see the liquidity areas. So where you're going to target. Euro yen took a ton of stops above, and it was just really, really cruel. And it's looking like it's going to get the one below 138.20. Especially if we do have like some kind of risk averse scenario, it's going to go up and take liquidity up, and it's going to come down to take liquidity on the way down. Absolutely horrendous behavior. That's what I put there. It's a bi-directional stop pump, so it might come down and get that, and if so, that would be really horrible. And there's the yen again, remember. So that's that. Signals, Thursday we did okay, 41 pips, not bad. Friday we didn't get any, which is fine. And this is the weekly total, 117, which is pretty good. We saw that we didn't get any signals Tuesday, Friday, but that's fine. But we had a positive result, and so we got technical checks in place now, and they're quite stringent and they're strong because they work on the daily time frame. And only by having a strong buy or strong sell do we get the signal in to Telegram. So there's the RBA, which is what we need to be having an eye on, especially if you've got Aussie exposure. We've got pound and CAD and dollar, and data points. So this could also be a mover as well, potentially. We really should be above 50 for PMI, and it's actually, its consensus is higher, but still 50 is like the normal figure. We're quite well below that, but we have to remember these guys in China, they locked down, didn't they? So that would be an expected low, and it is an improvement from where it was before. But 50 is like the go-to normal figure, and below 50 is a bit of a worry. And keep calm, trade safely, and then I'll wrap up now, and I'll speak to you guys tomorrow.